Hello again, traders, and welcome out. This is Ankit from Maverick Currencies, and this is our currency midweek update for February the 1st. Let's take a look at the market, see how things are sitting here as we are in this midweek, and also talk about this Fed meeting. And as we just had the FOMC press conference, so let's kind of break it down and see where the markets are and where we need to kind of pay attention. So stocks, again, is still in a bear market overall. I still think that the markets are still working out this huge ABC correction. And I think as we approach or have a little bit of a finishing touch to this rally, I think that's when we would probably see the next turn to the downside. But so far, markets are moving higher. We are above the 200 moving average. So the momentum in the shorter term is bullish. The dollar, again, remains in a downtrend. Although the velocity has really slowed down, you should look at the chart. The ranges are tightening up a little bit here. So it's still in a downtrend, but the slide has kind of slowed down. So kind of keep that in mind, that we are still, nothing has changed with the direction, but we just have changed the velocity. I still think the gold and silver continue to trade strongly overall. I think that's the area where we're seeing this negative correlation. If the gold market's up, that means the dollar is down. So keep an eye on that correlation. In the currency market, we're still seeing range-bound price action. Overall, like I said, a lot of these currencies have really churn here and go in a sideways range, regardless of the market condition. And a lot of the currencies are kind of doing the same thing. So we have to be very mindful whenever we see this kind of price action in the markets. But we really need to trade less and look at the strategy here. Directional strategy, breakout strategy, sometime is not as efficient because we don't get that follow through. But there's still decent opportunities that we can find on a day-to-day basis that could be just between those ranges. So always use the right strategy for the right market conditions. As far as the economic report goes, we have the Canadian GDP that came out on Monday. You can see that 0.1, there was no big surprise off of that. We got some US data, and you can see that some of the data was weak. Consumer confidence dipped lower. We had the ADP employment change that dipped lower, and we had the ISM manufacturing numbers that dipped lower. The only thing that kicked up was the Joel's job openings report, but everything else were on the downside. We also had an employment report out of the New Zealand yesterday, and that was also weaker as well. So you can see that, last year we saw the rate hikes, but the data was actually supporting the strong economy as well. But we started to see some slack in the labor market. We're seeing some slack in these manufacturing numbers, which is, again, the aftermath of these aggressive rate hikes that we have seen from the central banks. So let's take a look at the week's performance so far. As you can see that the markets, again, so far going into this Fed report, the FOMC rate statement, is pretty flat. S&P only down 0.12, World Stock Index down 0.26, crypto market down a little bit more. We're seeing more weakness in the crypto markets, but outside of that, you can see that pretty flat going into this news event. So if you take a look at the weekly performance, we are approaching that resistance. So in this resistance area, we're expecting that markets are still have a little bit more upside before the turn. I'm expecting a little bit more aggressive price action towards the end. And so far, I think we're just trying to break out above that range, and I think we can aim for this 42 to 4,300. I think this is the area that we will aim for before we decide to move lower. But again, keep in mind that right now velocity is very low. This is, again, very similar to what we saw early in the year last year, back in July and August, as the markets were rallying, velocity was low. So just keep that in mind, that this is not a market condition that that you're used to back in September, October, and even November. There was a lot of volatility, but now we're seeing a reduction in that volatility. Now, taking a look at the percentage change in the currency market, again, so far, bit of a surprise from the Swiss franc. It's the strongest currency, followed by the euro. So what we're noticing is that a little bit more relative strength in these two, euro and Swiss franc. Pound, on the other hand, is a weaker side, so we're getting this negative correlation between euro and the pound. And outside of that, Canadian dollar at 0.02. We're seeing, if you look at the movements intraday or day-to-day basis, there's definitely movements, but none of these movements are sticking. So we had the Canadian dollar being strong and just gave up all the gains. But you had the US dollar doing the exact same thing. We've had some rallies in between, but at the end of the day, the gravity, if you just think about gravity, the gravity is dollar weak, gravity is towards Canadian weak. On the other hand, we have the Australian, the Kiwi. Again, Kiwi is the weakest currency so far this week. Remember, Kiwi was also weak last week as well. So Kiwi is showing relative weakness, where Aussie is just pulling back after having a spectacular week last week. But again, not in line with the risk sentiment out there, and they are not really moving or showing some outperformance here. They're more moving in line with what the markets are doing. So Japanese yen is another mystery currency that has been pretty tough to trade, I must say. I've talked about it. This is a tough trade so far. You know, we get a couple good days with a couple down days, just not getting a whole lot of consistency. And if you really think about consistency, that's where some of these currencies will disappoint. But if you go with a strategy that is very shorter term, it seems like that is really the best place to be, you know, where you're looking at a trade for a day or two and not really committing it too much longer term, because the relative strength of weakness continues to be flip-flopping here. In the crypto markets, you can see that they are showing relative weakness. You know, January was a big month. If you take a look at the percentage return, so far, just in the consolidation phase. We did break out yesterday, I think, or day before that, and then we just kind of fell right back into it. So right now, I'm not really seeing. I'm expecting more of a consolidation in the cryptocurrency market. So let's do a quick market analysis and see where things are. And as I said before, you know, the equity markets, it looks like they are just waiting or finding a catalyst to break out higher. So that's where they're at. But if you look at the World Stock Index, they're actually kind of doing the same thing, but a lot more bullish compared to the US. And if you look at the trajectory here right now, they're on the upside, getting some pullbacks in between, but they are getting bought out. Remember, in an uptrend, every pullback gets bought out. In a downtrend, every rally gets sold. So again, that's the kind of price action that we kind of see in this environment. Same thing, low volatility, and I think this is where the markets are before we can find a significant turn. But right now, we don't have that. Crypto markets, again, look at the consolidation. They're above the moving averages, but they're consolidating. We have seen a lot of these runs in crypto markets that just doesn't go anywhere. So I'm always skeptical when it comes to these high bases. I'd rather look for pullbacks to buy into. But again, right now we have this 20-day moving average. If this gives up, then we have further downside risk in the crypto markets. So as far as the schedule goes, we have the FOMC statement and the press conference expecting to raise rates by 25 basis points. Outside of that, I mean, this is if you gotta realize that we are at this peak of this rate hike cycle, which means that the rate hikes are going or becoming smaller. We saw the same thing for Bank of Canada last week, 0.25%, and they talked about pausing the rates for now. Not looking to cut rates, but they're not really looking to raise rates aggressively, because some of the inflation numbers have been on a continuous decline, which is, again, helping the Fed to slow down those rate hikes. So keep that in mind. I think this first part of the year could be tricky, where some of these central banks kind of go sideways. So we might not get those fireworks that we were just so used to the entire 2022, when all these central banks were raising rates pretty aggressively. I mean, same thing. Tomorrow we have the ECB and the Bank of England. And you can see that they're both looking to raise rates by 50 basis points. They're lagging a little bit compared to the US and other major central banks, but I think they probably follow the same trajectory. So you got to be very careful with these central bank announcements, because then you might get a two-part reaction, where they hike the rates, we get an initial pump to the upside, but then they don't not as hawkish for their outlook, and then next thing you know, that really brings the prices down. So keeping that in mind. And on Friday, we have this U.S. employment report. So we'll be covering this live, but as far as the trajectory goes, again, right now we're seeing a slack in the labor market. Again, looking for an increase in unemployment rate. And I think we can disappoint on the employment change as well, where they're expecting 190. And again, you can see with the private numbers today, that number was much lower than what they were expecting. So let's do a quick currency market analysis and kind of study this relative trend of weakness and see where we need to focus on. So as you can see here in the chart, so we have already kind of passed the FOMC, and let's kind of study an aftermath of what happened with the FOMC. As we just look at the charts, we were kind of holding it steady for the dollar, but again, we are getting a bit of a push down to the downside. So if I just go shorter term, you can see not much on the upside, but we are still trying to push further to the downside. So we are, again, let's look at the daily chart. It looks like we are breaking lower. So if you're looking for continuation, I think you need to look for continuation down to further down. If I look at the weekly chart, you can see that we still have a little bit room to go before we touch this 200 moving average. And I think that's where it will find the pause. So on a weekly chart, you can see that kind of clearly here. So we still got another 2% down. And I think that point we might see a bit of a support there. But let's go on the daily chart. Right now, it looks like it's just breaking lower. And at this point, I think we have further downside risk in the dollar. Remember, the velocity in the dollar has really slowed down. So what we need is a bit of a flush out, flushing out, and then we'll start to see a rise. If that's the kind of a trajectory that we get here. But right now, I mean, the dollar has been in a decline for the last 3 months or 2 to 3 months. So we got to understand that we might need a little bit longer for this to get out of this zone here. We need to get above this moving averages to really see an improved score. But until then, this is still heading to the downside. Now, the Japanese yen on the contrarian side, you can see this is a tough trade. I mean, we had big ranges in January, but then look at the last few days. Things have kind of gone very sideways. And the problem with this kind of price action is that you get this pump and we get these dumps. As you can get the price action where price action looks good, that's where the turns happen. And as soon as you look at the price action going lower, that's where the turn happened. So the best thing to do is just trade the range. So you want to be seller on the top of the range, you want to be buyer at the bottom of the range. That's how you want to be trading the ranges here. I'm not so interested in the yen. I think there's better currencies out there. And let's take a look at the Swiss franc. And I think I'm definitely surprised with the Swiss franc performance. You can see I've been kind of looking at this more to the downside. I think the rally should fail. I'm still looking for that trade, but in the shorter term, we're still holding those gains that we had yesterday. But you can see I want to see further confirmation that those rallies are failing. I think that would be a good sign. Because again, look at the dollar. The Swiss franc was one of the best currencies in 2022. We've seen a lot of things turn here. So dollar has kind of made that big turn. We have seen other currencies made a big turn. I think Swiss franc hasn't really made that big turn. So I'm keeping a close eye on this one. And on the other hand, we have the euro, which is continuing to trade within this range. So I want to show the weekly chart on this as well. As you can see how it's just right below the 200 moving average. And that's where really is finding a big resistance here. We need to clear this level to really get excited for euro. But until then, you got to keep in mind there's a lid on this. So that's why we see euro run and then it find a little bit lack of follow through at that point in this turns. So interestingly, I think you got to pay attention to euro Swiss franc. That's another pair that I'm keeping a close eye on this year. You can see that we are way off the lows that we made late last September. And so far, you can see we're above the 20 to 50. So we're getting this high base pattern that's kind of developing here. But I mean, overall, very anemic price action. But I mean, take a look at where we were and how far we come. And I think this can easily get above or get close to this 105, 106 area. This is just sitting below the parity level. But again, so far, it's all about the timing here, not really getting the big move here. Let's talk about Kiwi here because, Kiwi is another currency that's just lagging. We had a massive rally last quarter, and now we're just kind of fizzling away. So again, same thing, not looking to play this very directionally. I think the best thing to do is trade the ranges here and not looking for the breakouts. On the other hand, Aussie looks a lot better. I mean, look at the breakout, pullback. And this is the only one that I think I like a little bit more directional compared to the Aussie. And again, same thing. You can take a look at Aussie Kiwi pairing. As you can see, the Aussie Kiwi pairing, they're actually moving above. And we are right at the 200 moving average, getting above it. I think we're getting out of the serious downtrend that we saw in the last quarter as well. So there's definitely things happening. It's just a matter of, getting the timing right for this. We had the Canadian dollar, which is kind of going this no man's land. We had a very nice price action yesterday. And then you can see that that's kind of given up all that movement so far. So not a good price action if you're looking for continuation. But again, this was a good move on 2-day trade. But I think right now on a daily chart, this is also consolidating here. If you go on a weekly chart, this is, again, right at the 200 moving average. So notice one of the patterns here is that we are sitting at this 200 moving average on weekly charts. It doesn't matter what pairs you're looking at. Either it's the euro, it's the CAD. Again, would this be providing a great support, or is this going to be a great breakout opportunity? So remember, keep that in mind, because a lot of these currencies are finding that they're getting stuck at these levels. Now, the British pound is the one that actually started to fizzle away. I like this on the weekly chart where, we got the massive rally to the 200 moving average. We already way off of it. At this point, I'm really surprised that we see a relative weakness in the British pound. So again, looking euro against the pound, you can see the difference there, and we're getting that relative strength in this one. So again, if you look at some of these these currencies like Aussie, Kiwi, Euro, Swiss franc, Euro, pound, there's definitely good correlation there and consistency there. They might take a lot longer for those to develop, and you want to be trading those on a higher time frames, but we definitely have that. But if you're trying to figure out the dollar and the yen, realize that you're just going to get some volatility, and that volatility could be great if you're looking for good short-term opportunities. But if you're trying to hold a trade for longer term, realize that it's just not really moving as aggressively. So right now, if I want to be going on along any of the against the US dollar, I think Aussie dollar is looking great here. Look at the daily chart. We got a nice little pullback right here, and we are trying to go above right off from it. I like this pattern here. Where's the next level of resistance? I think we have some resistance in the 72 area right here before we can kind of push higher. Other trade that or the pair that actually looks pretty good here is the euro dollar, which again you can see that's already broken out on the daily chart. So again, if you're looking for a continuation pattern, these are the currency pairs to go. If you're looking for something slower, then you can go for euro pound or euro Swiss franc, and they will be just lower velocity, lower movement, but you might be in that trade for a little bit longer. Again, in conclusion, focus on the currency in play. We got some nice movement today. The question really comes down to is the follow through. And again, if you are in a range bound price action, then just trade the range. If you are looking for something directional, then trade directionally. But you always need to figure out what the overall direction is, and so we can use the right strategy for it. So make sure you're using proper position sizing. Trade with better velocity scores. Focus on what's moving. There are days where we've seen some currencies are much better to trade than the others. So do that and avoid the currencies and try to not get stuck in a trade that's not going anywhere. It's almost like watching paint dry. And I always find that it's better to stay out in cash and look for the next opportunity rather than trying to get stuck in these trades. And that kind of, drains your energy by watching it. So I still think Friday will be a good another trade, a news event trade on news payrolls report. We'll be sending out a employment report preview tomorrow evening. So we'll be preparing for the strategy, but then we'll be covering that live in the payrolls class. So that's the game plan here. If you have any questions, always reach out. Otherwise, take care, happy trading, and we'll see you in the next class.